Good morning, everybody. Paul here coming at you with a Crypto Coffee update in which we talk about all of the news, events, and happenings as they pertain to the exciting world of digital finance, colloquially known as crypto. And let me tell you, there's never a dull moment, always something going on, always new developments. And in order to keep us alert and on top of our game, and also nice and warm in this frigid crypto winter, join me for a simultaneous sip of water or tea, or in my case, and for the namesake of the series, coffee. Cheers. Awesome stuff. All right, so we have some exciting news and developments for you today, which comes as a surprise to absolutely nobody who's been following this story and paying attention to Tether. They have silently updated their terms and services to include that the USDT, the USD Tether token that they issue, may not be 100% backed by fiat at all, let alone US dollars. Here's a web archive from February 19th saying that every Tether is always backed by a one-to-one traditional currency held in our reserves. So one USDT is always equivalent to one USD. That last sentence is important, since here's the new updated version. Quote, every Tether is always 100% backed by our reserves, which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities, collectively reserves. Every Tether is also one-to-one pegged to the dollar, so that USDT is always valued by Tether at 1 USD. Notice the change in terminology, always valued by Tether, subjectively, not the full faith and credit of the United States government and Federal Reserve, but by the organization, opaque collection of individuals that comprise Tether itself. So they're the ones who are discerning whether or not this has a valuation of $1 US. Definitely spooky stuff. Now, I'm not going to go into full detail about Tether, since back a few months ago when the one-to-one Tether peg with the US dollar broke, and it fluctuated all the way down from 50 cents back up to $1, and everywhere in between, I made a video series that documents all of the shady, to say the least, history behind Tether and the individuals that comprise it. Like I said, not going to go into insane detail today, and all the links are here in the video series, and this will be below in the description, so you can use this as a tool to stay up to date on the entire saga as it unfolds. We here at Cryptide have been screaming from the rooftops that the individuals that comprise Tether and Tether itself as an entity have very shady and opaque ties to other individuals and entities in the cryptocurrency space, and the level of opaqueness in their dealings is definitely meritorious of concern, to say the least. So this is a great way that you can stay up to date on what unfolds and not be too surprised as to some of these developments that are coming down the pipe. And it's a two-part series, so you get the full scope of the story as to what's going on. So definitely a great tool that we here at Cryptide provide to you for free so that you can stay up to date on all of the happenings, since like I said, it's constantly moving and there's some wild and interesting stuff. Really, it's better than any fiction story you could read. Alright, so next up we have Stellar Lumens talking about trading on Coinbase Pro, which will happen here in the next few days once sufficient liquidity is established on the Coinbase Pro platform. So first off, congratulations to Stellar Lumens. This is a big step for any crypto project, considering Coinbase is a major fiat currency on-ramp specifically for the US dollar, which is by far the largest market for crypto, it seems. So great stuff happening there. The Ripple co-founder Jed McCaleb actually founded Stellar, and this is a guy who also founded Mt. Gox. So we have huge amounts of connections from this one individual in particular. He has a great head on his shoulders, really sharp mind, and he was recently on the What Bitcoin Did podcast with Peter McCormick. So if you didn't see the interview with Jed McCaleb, very much worth a watch. He's a really, I don't want to say fiery character, but definitely shoots from the hip, doesn't mince words, and I can appreciate that in the person. So back to the meat of the matter, Coinbase Pro has already identified more than 30 digital assets since starting the exchange back in last December when it was first considering XLM, and already they've listed some assets like Civic, District OX, etc., Decentraland, DAI, the Golem network, and this is a way that individuals, institutional investors can kind of dip their toes into the crypto ecosystem and gain some exposure to some of these alternative digital assets that are not Bitcoin as it becomes more normalized in the human culture all around the world. We're seeing more and more in vogue these kind of digital assets and their various applications. Now that the dust has settled from the great 2017 bull market, we're finally beginning to see individuals and institutions alike look at these digital assets with a more discerning lens, trying to find their real-world applicability and use case for their various industries. So it's very exciting to see a more level-headed, rational approach for these assets, of which Stellar Lumens is definitely one of the top. Now, next up, we have an exciting announcement for R3, specifically Mrs. ELISA DiCaprio. Congratulations to her. She was named as a representative of the Trade Finance Advisory Council by Secretary Wilbur Ross. So this is a really big move for a council that really seems to focus on finance and trade in particular, and R3 being a large blockchain business and entity in the space that can hopefully allow ELISA to help to bring these individuals that are on the board up to speed with distributed ledger technology and blockchain in particular. R3 has the Corda platform, which is a semi-permissioned blockchain platform that allows individuals to build upon it. And they also have Corda Enterprise, which, as the name suggests, is geared more towards larger institutions and enterprise-level clients that want to build a more permissioned network and, as said, kind of dip their toes into the blockchain space. So this is a great opportunity for R3 to interface directly with some of the regulators and decision makers in the financial space. So again, congratulations to everybody involved, ELISA in particular. This is a huge step for not only the blockchain community as a whole, with, as said, interfacing with the regulators, but also for R3 as a company. So really good to see that entities in the space are making moves like this. Now, we have some court rulings talking about Coin, maybe? We'll go with Coin. Sometimes these names are really janky. So we'll go with Coin. They are held liable for reversing a Bitcoin trade worth millions of dollars. Now, this is part of the centralized issues that we see when you have a third party able to facilitate transactions on behalf of users. They, in turn, have the ability to reverse those transactions up until the point when they're logged on the actual Bitcoin blockchain. And if they wanted to reverse them using their own liquidity reserves, they could reasonably do so on their own books. And that's exactly what happened here when B2C2, they saw an abnormal trade, essentially, when they tried to trade for 250 times higher than the market rate of Ethereum. So essentially, this entity, B2C2, tried to do a kind of strange trade. Coin saw that as very odd and out of the ordinary. So ultimately what they did is they reversed the transaction on B2C2's behalf. Now, it seems that B2C2 wanted to do this trade since they ultimately sued Coin and wanted to receive the difference in capital between the Bitcoin valuation at the time of the trade and the current Bitcoin value, which at the time was a difference between $1,300 and $3,800. Amounting to almost $12 million at press time, trying to get that back from Coin. And it seems that the Singaporean court ruled in favor of B2C2, which means that any centralized cryptocurrency exchange in Singapore, or at least in that jurisdiction when they're being ruled over, essentially amounts to a precedent that suggests you are responsible as a proprietor of the exchange for augmenting the ledger and the records on said exchange, which seems to make reasonable sense. It seems the logic would flow pretty solid with that, but it's interesting to see it in a judicial perspective. They're also reviewing the judgment and considering options, including a possibility of an appeal. So while this is a judgment, it's not set in stone. If they do appeal it and it gets overturned, that can change up the precedent. But suffice to say, this is a good sign for some kind of fiduciary responsibility on behalf of these centralized exchanges. There's been a litany of exchanges that have closed down in really strange ways. Of course, you have Mt. Gox. Who can forget Mt. Gox? Not only that, we also have, what was the name of that one? Cryptide shut down. The guy who ran it fled to China. He's still at large. So it's good to see some kind of responsibility being imposed on these centralized third parties. I'm going to skip ahead a bit and go ahead and talk about Mt. Gox since we just mentioned it. The CEO of that exchange, actually, talking about justice, Mark Karpeles, is going to reasonably sure face jail time for his activities with the exchange. This is the individual who purchased the exchange from none other than Jed McCaleb. So Jed McCaleb, who created Mt. Gox, sold it to this guy, Mark Karpeles, who then in turn ran it into the freaking ground. And withdrew around $3 million, a cool $3 million of customer funds, and misused it on things like shopping sprees, luxurious trips, and allegedly even prostitutes. So not a really stand-up figure in that regard. But suffice to say, he may be facing up to a decade behind bars, which is a pretty large amount of time. But given that he took $3 million, that's about $300,000 a year in terms of what he spent relative to each year of jail sentence. So pretty good deal ultimately. I hope he had fun with his customers' money. But yeah, if the trade-off is jail time, then what are you going to do? This is occurring in Tokyo, where Mt. Gox was based. A huge amount of cryptocurrency activity originally occurred on the islands of Japan, so very interesting stuff there, hence why this jurisdiction has been selected. There was some spats with Brock Pierce, another individual who claimed to have full legal ownership of Mt. Gox and wanted to shift it over into rehabilitation rather than just going into bankruptcy. That's still up in the air, but it seems as though at present the Japanese court wants to move forward with simply charging Mark Karpeles and using the remaining capital to distribute out to the individuals who are owed it. So it seems as though that saga is winding to a close. Mark may be very well going to jail. Wild stuff. It's been a very long saga. You got to think 2013 to 2019. This has been 6 years in the works. So wild stuff. Now back over to the United States, back into more regulated territory, less choppy waters. NASDAQ is powering a full stack cryptocurrency ecosystem going live in the first half of this year. So really interesting stuff. This is from an entity known as Because. Because is going to utilize NASDAQ's clearing and quote market surveillance technology. We've been seeing the terms market surveillance, blockchain forensics, and that sort of information more and more nowadays, which I'm personally excited about. There's definitely some things to consider and pauses for concern when considering surveilling blockchain history. Keep in mind the hacking team and via Coinbase's acquisition was a very unscrupulous move and definitely is meritorious of concern. However, seeing a level of transparency in these kind of activities is paramount, especially because there is levels of market manipulation and wash trading currently in the crypto scene that are not indicative of a healthy market. Even just looking at Tether and the notion that perhaps a multi-billion-dollar stablecoin that's supposed to be a paragon of stability in the wider crypto market is starting to fray at the seams is not a good sign. So any larger institution that would want to put money into this kind of ecosystem would definitely be taking a big risk. So having some kind of assurance that no market manipulation is occurring and that, as seen with Brave New Coin, you have a liquid index and an assured price that is real and not just something that's wash traded is critical. So it's really great to see that Because is taking a leap forward with the help of NASDAQ to create a more insulated form of infrastructure and a sort of one-stop shop, as you see here, for institutional investors. Here's a quote from the CEO of Because. Quote, "We have tremendous respect for the NASDAQ brand and are honored that we can deploy these robust, tried and tested platforms customized to our unique markets as the foundation of our technology. I fully expect that our markets will attract a broad range of users, for those who are already quite active in the financial markets and familiar with NASDAQ technology, to a new breed of investors wanting to participate in the growing cryptocurrency marketplace." End quote. I think it's encouraging that he starts off with already quite active financial market participants. Just goes to show who this is mostly geared towards. And as said, definitely having an assured mechanism by which institutional investors can interact with the crypto space is encouraging. Who knows if Because will end up competing directly with Bakkt, or if when Bakkt is even going to launch, considering they're still working out some of the kinks in their system. But really interesting stuff happening on Wall Street, bringing some of that Main Street cryptocurrency exposure to them. Now, speaking of large institutions, IBM has created some technology that could prevent replay attacks in a permissioned ledger. It's a bit technical, however, suffice to say, it seems as though it's using a private key and public key pairing for a one-time signed certificate by which individual nodes in a system can be assured that this communication is coming from the source that they think it's coming from. Essentially, it is a resisting replay attacks efficiently in a permission and privacy-preserving blockchain network. The patent will work towards preventing replay attacks on permissioned networks and that privacy is kept intact. Here's a quote from the patent. "In a network of computing systems, a method of communication may comprise at a user computer system, generating a security value that is to be used only once." So a one-time use, generating a message signed with a security certificate and including the security value and transmitting the message over the network of computer systems. So a semi-encrypted version that semi-encrypted certificate rather, that assures that the point of origin is indeed who they say they are. So really cool stuff for permission chains. If you remember last Crypto Coffee update, we took a look at the European Blockchain Observatory report that was done via consensus. And the results of that report, the executive summary, stated that these permissioned blockchains are largely going to be the first wave of enterprise blockchain adoption as the more distributed systems grow to be more robust and flexible. So really, this is a good piece of progress to see that replay protection is becoming more concrete on these permission systems, and this will no doubt make more enterprise level clients and institutional investors open perhaps to this kind of technology, considering it is now more robust and secure. Now, illicit mining rigs, I thought this was really funny. Apparently they're commonplace in universities and small businesses. Not so funny about small businesses, especially because every dollar counts when you're a small business, but I found it pretty humorous at universities, considering an individual who is going to university and maybe is more finance savvy and future thinking may ultimately take advantage of the fact that in the dormitories you don't have to pay directly for electricity. And that's exactly what seems to be occurring for many savvy university students, some of them perhaps unwittingly affected by browser miners like the Monero miner we talked about recently, or perhaps other individuals are doing so directly using more quiet ASIC machines to try and maximize their crypto gains. You can see 22% of illicit traffic is occurring via education through college, and energy and utilities is the lion's share at 34%. Makes sense, there's a lot of energy sloshing around a power plant. Just suffice to say, this is something that universities are privy to. They know this is happening. They've put out announcements saying, "Hey, don't take unreasonable advantage of university resources. We can penalize you for that." But again, how would you really know per se? I guess you could isolate each dormitory room's energy consumption, but if you don't have anything definitive, that's going to be very resource intensive. So I just found that really humorous and interesting, and just goes to show that unfortunately, while there's a humorous element to it, businesses are indeed hit hard as well. So this uninvited crypto mining is undertaken remotely via malware and taking advantage of high bandwidth enterprise networks, which makes a lot of sense. If you have a lot of bandwidth for your network for your business, that can be taken advantage of, and mining can be much more effective. And ultimately, that's taking advantage of your business. So not cool stuff there. More humorous for universities, less humorous for small businesses, but just goes to show why you got to protect yourself. Hit Control-Alt-Delete, open up that task manager, and make sure nothing strange or suspicious is running in the background of your computer, and do a flyover of your network. Make sure there's no strange devices you're not familiar with connected to your network, that sort of thing. So basic security practices, you can find all that kind of stuff easily over the internet. And there's actually a resource for router security that I'll include below in the description as well. It's a bit more technical, but definitely securing your network is something that we can all do ourselves, just following the step-by-step processes and ensuring that our high bandwidth businesses aren't being taken advantage of, and that our networks are indeed secure. So just some good implications to take out of this article here. Next up, we have the Thai Stock Exchange is building a digital assets platform to launch in 2020. Considering just 3 weeks ago, we talked about how there was a pyramid scheme occurring in Thailand that saw over $3 million taken from local individuals. Actually, it was $1.3 million, so a little less damaging, but definitely a huge amount still. It's encouraging to see that the Southeast Asian nation is moving towards a more regulated, assured framework, especially given that perhaps their less developed, formally capital markets are more susceptible to, unfortunately, various kinds of crypto scams that are very popular. Keep in mind, the guy who made OneCoin was recently arrested, so hopefully this is a sign that we are moving towards the twilight era of these kind of illicit scams. But as human nature is, I don't think they're going to go away fully anytime soon. Basically, though, this individual whose name I won't try to pronounce, he's the president of SET, which is the Stock Exchange of Thailand. He said that we have a 3-year strategic plan so that by 2020 they will have, again, a one-stop digital capital market, so a one-stop shop for digital assets in the Southeast Asian nation of Thailand. This is really interesting to see how various jurisdictions are beginning to interpret these crypto laws, create their own ecosystems, and set precedents to perhaps allow their jurisdictions to be more favorable for these blockchain projects when compared to their neighbors. Thailand is running up against, it seems, Singapore, which was, where was that? Yep, right here, in terms of judicial precedent in establishing these kinds of laws and regulations. So Singapore is now, with their security tokens offerings and their precedents like this, you're beginning to see that they have a more robust and mature form of legislative approach towards these digital assets, and it seems Thailand's taking that route as well. So really interesting stuff happening all around Southeast Asia. Now, Dash, the semi-privacy coin, uses a jumbler to give you plausible deniability for your purchases. They have partnered with PolisPay. Gotta love that alliteration. Meaning that you can now use your Dash and other crypto as well, including Zcoin and a few others. I believe, I'm not sure if Smart Cash was on there. I think they might be. Don't quote me on that one. But Dash is for sure. And PolisPay has partnered with MasterCard. So by the transitive property, you can now preload your PolisPay card with Dash and buy your groceries like you can see here. So really interesting stuff happening there. Here's an image of the PolisPay MasterCard, and you can sign up for one as well. Now, I did not meticulously read through the terms and conditions of this card, so I'm not sure what jurisdictions are allowed and what jurisdictions may be blocked from using this service. So do your own research on that. I'm counting on you guys for this one, since this isn't something that particularly interests me beyond the fact that it exists and it's definitely helpful for the entirety of the space. Definitely something worth checking into if it interests you, though. But again, do your own research and assure that you are allowed to do so in your respective jurisdiction. Either way, fantastic development for the crypto community as a whole, allowing individuals to utilize crypto out in the wild. Fantastic. Now, Prog proof of work. That is something that has been on everybody's mind relative to Ethereum. Now that we got the Constantinople and St. Petersburg upgrades behind us, we can now move on to talking about scaling. Ever important for the Ethereum network. Now, they do want to eventually get to proof of stake in what's called Serenity. But in order to get from proof of work to full proof of stake, there's a lot of in-between steps. One of those being a decrease in mining rewards, as we've seen recently. But this new version of algorithm progressive or Prog proof of work aims to stop ASIC mining, as you can see here, and is starting to get some supporting votes from the community. However, not everybody is supportive. Essentially, what Prog proof of work wants to do is implement a few various steps to make the proof of work system a bit more prohibitive and difficult to use. Before we examine those, I want to give a shout out to Julia Magog. This is a fantastically written article. I mean, truly, she did a great job on this one in terms of just aggregating the information and presenting it in a very reasonable way in terms of the flow, and the content is just great. It's really, really hearty in terms of explaining what's going on with Prog proof of work. So cheers to you, Julia Magog, for a great article. Now, let's get back to those 5 changes that are being undertaken in Prog proof of work. They're changing the CAC algorithm from 64-bit to 32-bit. So the latter's been optimized for 32-bit platforms for better compliance and architecture for video cards, which means GPU and CPU mining gets a boost. Increased mixed state, it's going to help out as well. Adding a random sequence of calculations to the main loop, extra work for the ASICs. Adding reads for a small low latency cache with random address support. This causes ASICs to follow the GPU memory hierarchy, again favoring GPUs. And they're increasing the DRAM from 128 to 256 because of bigger volumes simply favor video cards. So this is essentially a multifaceted approach that will push ASICs into being less energy efficient overall, and they'll have to apply some of the GPU rules to how they process the algorithm, ultimately favoring GPU and CPU mining. Now, this has a intended effect of decentralizing mining further and favoring small miners, easing the transition to proof of stake, which will have more of a staking effect, meaning that you'll have distribution kind of native to that architecture. Part of the reason that individuals are against this is that they see it as largely a distraction, especially given that it's kind of slips into the never-ending war against ASICs. Optimizations can happen in often unexpected ways, so detracting resources to this kind of network upgrade may ultimately serve as a red herring as ASIC manufacturers seek to work around this kind of implementation. If that occurs, then you have a game of cat and mouse, as we see in Monero, which is largely a resource drain. Perhaps not an unnecessary one, but definitely something that detracts from an ecosystem when, in Ethereum's case, is already focused very heavily on scaling. So any detraction of focus of development and resources is not something that is welcome on the network per se. That's ultimately Vitalik said, calling it a distraction. And it's very difficult to discern who's supporting what these days, since in the voting capacity, they're seeing a lot of troll accounts, a lot of nefarious and non-genuine expressions about progressive proof of work. Some people are very for it, some people are very against it. And when things get heated and divided like that, you can have kind of false flag moves on either side, helping to muddy the waters in conversation, and ultimately serve to kind of muddle the dialogue, making it unclear as to how much support each segment of the community community has and for what reasons, and that's always unfortunate. So here's my call for more open and civil dialogue on this kind of thing, since it's really amazingly interesting. We're literally watching a decentralized and kind of distributed system come to its conclusions via community governance. So really exciting stuff. A lot of individuals in the field are against it. A lot of individuals are for it. So as said, there's no clear consensus. What do you think? Have you done research on progressive proof of work? Are you for it or are you against it? Do you think ASICs are an intrinsic threat to the network, or do you think that an increase in hashing power ultimately has the effect of defending the network as a whole against potentially nefarious actors? Again, no clear answers. Really curious to what you guys think. But with that said, I believe that's all the information that we have to cover for the day. Hope this could be informative. As said, go back and check out these videos. Get yourself up to speed on what's going on with Tether. A lot of incredibly interesting stuff in this space. Connections that are oftentimes unexpected or perhaps fully expected and a bit worrisome. Nonetheless, with that said, thank you so much for watching, guys. Couldn't do it without you. Check out the links below in the description. Please leave a like and subscribe if you can. It actually really helps the channel a lot. Check out the Discord. Love talking to you guys. But for now, my name is Paul, signing off. Thanks so much for watching, guys. We are Cryptide, and remember, the tide is rising, as is the amount of words necessary to communicate Tether's backing. Eventually, they're going to have to write a thesis as to how they are abstractly backed. Good stuff.